What's going on, baby? If you guys are new to trading, this video is gonna be for you. I mean, take a look at this chart. Does this just look like a jumbled mess of nothing? If so, we're gonna show you guys how to make sense of all of this with the most simple trading technique you can find anywhere on YouTube with nothing more than just simple trend lines and trend channels. So without further ado, let's get to the charts. All right, all right, all right. So as we see here, if you look at the very bottom right, on the right side, we see that it is 6:30 a.m. Pacific time, which is right near the market open. The first thing that I like to do when it comes to trading is to give myself an idea of what the market is doing right now. And to me, it looks like we're going from the lows to the highs, back down to the lows. So what do? We just draw a nice range to show us what is really going on. The next thing we do is draw the most accurate trend lines possible that will give us an idea of what the price action is doing. A lot of people in trading will see a trend something like this. This is a perfect example right here. And draw a trend line to fit the most price action possible instead of the most accurate price action possible. And we're going to see why this is very inaccurate. So as we see here, this wider trend line looks pretty valid, right? But why did we all of a sudden start reversing after just the first break of this and start going up? That's because in the rules of price action, once there's a break and a new low, only then are we able to look for a possible reversal in trend, which is the reason why the short-term trend lines, especially in days like this where we're ranging from the lows to the highs and down back to the lows, we want to go with what fits the most accurate price action, that'll allow for a break and a new low to happen, and then we can see that there is reversal. And the reason that these price action rules work is because every smart trader out there is following the same exact rules for trend lines. All right, let's take a look at an uptrend. Once again, we can see that there was an uptrend here, so we can either draw a trend line like this, but once again, we see that, wait a second, we're going up, we reached these highs, and then we just all of a sudden started reversing. That doesn't really make sense, right? What we want to do is focus on the very short-term trend lines, and once again, we had an uptrend, a break, a new high, and then we started to reverse. And we can see that the same thing then happened on the downtrend. What the trend lines give us are not exactly when and where to enter a trade on a specific bar, but what they do for us is they present us a way to interpret price so then we can use certain rules and enter trades given the right market context. So what does that mean? We look for second entries, failed second entries, and always in the right market context. So what does that mean? In a downtrend, we don't want to just go short around here once we already had a break and an attempt at a new low. We want to go short or long while we're still in an uptrend and looking for new highs or new lows. So when I see the first setup, I'll let you guys know. But as of now, if I was trading in real time, I don't see any nice setups. I really see a lot of congestion right here. So I'm going to draw a lot of mini ranges and short-term trend lines because, like we said, those are very, very accurate and powerful. So now we had a break and a new low. We can see that in this case, because we are expecting to then reverse, we can look for failed second entry short. What these are opportunities to trap people who are still going short even though the trend is over because there was a break and a new low. So if we count from this low, let's look for second entry shorts that we can potentially go long on a failed second entry short to trap all the people who went short too late after the downtrend was over. We're going up and up and up, and once this bar barely ticked below that one, that's a first entry short. And when we keep going again, because this bar all the way on the right ticked below that one, that's a second entry short. Once again, we want to draw a short-term trend line. because we had a break and a new low of this downtrend, we're in this short-term uptrend. We haven't had a break and we haven't had a new high, signaling we're still in the uptrend. If we tick above the next bar, that would signal a failed second entry short, and it actually wouldn't have worked out. Now, why did this trade not work out? There was a bullish bar. We had a failed second entry short, as discussed. But wait a second. What's this third bullet point we have here? Market context. Okay. Let's see why this trade didn't work out. First of all, if we look at this bar, it's not touching the EMA. So that's the first signal to us that, okay, maybe I shouldn't trade this just yet and I should wait for a touch of the EMA because the EMA is also very powerful in that regard. Also, we're going long right into this congestion that we just had. If we extend this line, you're going long right into all that congestion, and that's never a good idea. So in this case, it would have been smarter to wait for an even better trade to present itself because we're only looking for the most high probability trades. Now, obviously, this trade did look very nice, aside from the fact that, like we said, we're into the congestion and we weren't touching the EMA, which you can only really interpret in real time once you do this over and over and over again and keep practicing, which is honestly not very difficult, but it does take time and practice and continued watching of these YouTube videos. But let's see if there were any more setups. So now we had a break and a new high of this short-term uptrend as well. And obviously, we see that we had a reversal. Now, once again, we could have drawn the trend line like this, but why'd we start reversing if we didn't have a break and a new high? We want to draw these short-term trends because, wait a second, maybe there's even another sort of trading range that looks something like that. And we're just trading in the lower half of this bigger trading range. Because what we're trying to do is just make sense in our heads what is going on and interpret this like a language, which these drawings allow us to do. And once again, we had a lot of congestion, and we finally reversed. Once we reverse, let's draw our short-term uptrend. And let's look for second entry longs because we're in the uptrend. And as we see, we had a first entry long, a second entry long right here. But once again, even though we're looking for a new high of this uptrend because we had a break, this violates our third rule of only taking trades in the right market context. And we see that all these bars are stacked up. We're still away from the EMA, so you should skip that trade as well. Also, this bar all the way on the right is not very bullish, and you would have went long right after that one. And it's never a good idea to take trades with poor signal bars like that. And we see that we ended up trading down even more once again. But we had a break, a new high of this uptrend. So now we're signaling in our heads, okay, now we might look for short opportunities. These are failed second entry longs for people who are still going long after the uptrend was over, or second entry shorts, but also only given a great signal bar and in the right market context. And we see that we traded all the way down without a opportunity to go short. However, let's see if we can spot a failed second entry long. And I actually did take this trade right here in real time. If we're counting from the high, right here, we're going down. Our first entry long appears right here because this bar broke above that. We traded all the way down, and we had a second entry long right here. Now, because we're in a downtrend, we do not want to look for long entries, obviously, but we want to look for failed second entry longs, which happens right here. If the next bar breaks below this one, that would create a failed second entry long. And it indeed did end up working out. Now, we do have to draw this short-term uptrend, and we didn't have a break in a new high yet, which adds more risk to this trade. But in this case, the market context takes over because look at this wide downtrend, very, very strong downtrend compared to this short-term uptrend. So once again, this is like a language. If you see this much bearish momentum followed by a little bit of bullish momentum all the way touching the EMA followed by a lot of rejection, you can, in your head, based on intuition, on top of the fact that we're at the top of this congestion from earlier, that, okay, the downtrend is more likely, very, very high probability that we're going to keep going down to find a new low of this downtrend. So let's see, we got a new low, and we began to reverse. Once again, the short-term downtrend is more accurate compared to a downtrend like this. Because if you had a downtrend like this, why are you reversing once again above the EMA if you didn't even have a break in a new low? What that means is this short-term downtrend takes precedent once again because we had a break in a new low. Now we can look for reversals. And wait a second. I thought that downtrend was more accurate. But we're also traders and we know that these downtrends and uptrends are not 100% accurate. So what any smart trader would do, or anyone with common sense, is, okay, let me fit these trend lines to fit the price action. So even though I changed the downtrend, I'm going to go back to it because this fits the rules more than the other one did. We had a break and a new low. And this is what I do in real time, because this is just what people are doing on a larger scale. All the smart traders are doing this. We had a break and a new low, and once again, we started to reverse. Now, we have a lot of choppiness, but we start to see that, wait a second, maybe there's even a wider trading range that looks something like so. We're just always adjusting these trends, but what I love about price action trading is that we don't have to rely on any lagging indicators besides the EMA, but the EMA is so accurate and powerful that that's really all we need besides these trend lines on the chart. So now, once again, we had a break and a new low, and we can start looking for long opportunities if they present themselves in the right market context. And we see that we have an uptrend, and in real time, we'd be looking at that, and we draw something like that. Now let's look if we can see any second entry longs. So in real time, you might have this trend line. So there's a new high, a first entry long because that bar barely broke above that, followed by a second entry long if the next bar breaks above this, which did indeed happen. And this would have been a nice trade for a couple of reasons. First of all, if we only were looking at this in real time, it's very good to draw the trend line off the highs in an uptrend, because look how many touches there are. I mean, I don't even know how many. 1, 2, 3, 4, 5, 6, 7, and then on the lower part we had 1, 2, 3, 4. I don't even know, but once we had a touch at the EMA, a touch of this trend line, a first entry long, second entry long, you can go long right above that, and it would have been a nice trade. Now, once we keep going up, we should extend the trend line, of course, and we continue to look for second entry longs. And that happens right here. First entry long, because this bar broke above that, followed by a second entry long right there. However, we would have had to skip this trade because this signal bar is very bearish, and you don't want to go long above those, and there's a reason why. We had a first entry long here, right there, because this bar broke above that. And then we had a second entry long because this bar broke above that. However, because there wasn't great market context, we would have skipped that trade and it would have been a failing trade. Now we had a break. We're still expecting a new high of this uptrend. Let's see if we get it. We get an attempt at it. We get another attempt. So now we can see, okay, we had a break and a new high. We can either reverse or the trend can keep going, but we're really not sure what's happening because prices are just reacting above and below the EMA. And we do end up pushing up once again and pushing up another time. So what do? Only now can we really see, okay, maybe there is a wider uptrend that looks something like that. And that looks very accurate to me. At this point, you can also draw shorter term uptrends within the wider uptrend. And once again, we can look for second entry longs. Now, at this point, I don't think you would have had this wide trend. So we would have had the trend we just had that looks something like this, and we would have had a break and a new high, followed by a break and a new high of this short-term uptrend. We didn't even need that wide trend to look at this next trade that I'm about to show you. So if we look, we had a break and a new high of this short-term uptrend. We also had a break and new high of this other uptrend. We had a new high. We had a first entry long right there, followed by a second entry long if the next bar breaks above this. However, we're already in our heads thinking, wait a second. We're nearing the top of this trading range, which means there might be a lot of selling pressure. Also, we had a break and a new high of this short-term uptrend, a break and a new high of that wider uptrend. So we should probably skip this trade because the market context is not great, and it would have been a losing trade. Now, once we see another push above the EMA and above the trading range that we had drawn, and we see a lot of continued momentum, then we can draw another short-term uptrend. We can also draw this wider uptrend. However, what is more powerful and more accurate is these short-term uptrends, which is why I really emphasize always drawing the short-term uptrends. And in reality, the wider term ones don't give you that many setups. What they do is just, once again, they give you a way to interpret the price and a way to really just visualize and make everything nice and tidy. So let's see if we can get any second entry longs. First entry long, followed by a second entry long if the next bar breaks above that. However, this signal bar is not very bullish, so we would skip that trade as well. It would have worked out, but like we've shown previously, the great signal bars are not, or the not great signal bars are not what you want to trade on. So we had a break and a new high of this short-term uptrend. We're still in this wider uptrend, however. So let's extend our trend. And we see a lot of choppiness. So we really don't want to mess with a lot of it. Now, we finally have a break of this uptrend. Let's see if we can get a test at a new high. And we see that we traded above this trading range again. Once we do that, we can kind of tell ourselves, okay, there's a lot of bullish momentum, but also we might be wary that we might want to pull back. So we just have to think trades are going to be a little more risky at this point, especially that we're 4 hours after the market open. And as we see, we're getting some attempt at a new high, but just a lot of selling pressure. And once we're going up and down and up and down and up and down, at this point, we really want to just close the shop, and we see that we did have a continued uptrend, but this is very choppy. And we can see that we finally got the new high of this after the break. I hope you guys enjoyed this video. Hope you guys learned some things. Leave me some comments, subscribe, get those post notifications. Peace, and good luck to you.